Shares of accounting software company BlackLine falling today, down 13.6% after reporting Q2 earnings and an executive shakeup at the top. But for the year, this stock has been an under-the-radar winner, climbing more than 50% as more companies accelerate their digital strategies. Joining us now is BlackLine founder and CEO Therese Tucker. Therese, welcome. I wonder if anything, if the stock moved. Good afternoon. I wonder if the stock moved down so much because you announced you're stepping down as CEO. Why'd you make that call?
Well, you know, Sarah, I don't think so. This has been a multi-year succession plan where we've brought in just some incredible executive talent. I really think that it's just a combination of market factors and uncertainty about the future. But overall, we're very long-term focused, so I'm not worried about that.
So let's talk about your focus, which has driven this enormous run in the stock and in the business lately. What do you do for companies like Under Armour, for instance, and other Fortune 500 companies that have adopted your software, especially during this time, during the pandemic?
Well, unless you work in the field of accounting and finance, you don't realize how manual and paper-based many of their processes are. We provide software that automates and centralizes so that accountants can be liberated and focus on the things that they actually enjoy doing. So we have more than 3,000 customers, and by automating, companies actually get better financial results as well as higher employee satisfaction.
Who do you consider your biggest rivals? Is it traditional accounting companies, or do you think the likes of Salesforce, SAP, Oracle, etc., will pivot and start to offer these types of accounting-specific services as part of the entire package of subscriptions that they offer, and that could be quite a backdoor threat to you?
Actually, we partner with all of the large ERP vendors. Some of the ones you just listed are both partners and customers. The reality is most companies have multiple systems, and it's difficult for them to actually do what we do. And so, no, we like to partner with them instead.
So what kind of growth are you projecting at this point, and how different is it now that these companies are all spending so much on their digital services like what you offer?
Well, we certainly see both digital transformation and also, frankly, this pandemic. We believe COVID's a great long-term accelerator because companies are recognizing that manual processes are simply not sustainable. But in the near term, we're being pragmatic about our growth because we don't know what's going to happen to corporate budgets, or, you know, some of these larger transformation projects may be put on hold. Over the long term, I think we have the potential to continue some very robust growth. We're still in a very untapped market. And actually, to Wolf's point, our biggest competitor right now is spreadsheets.
I had a wildcard question, given that, as I'm sure you're aware, one of the stories that's grabbed headlines in 2020 has been the fraud at Wirecard, and whether if a company subscribes to a accounting plugged-in cloud software like yours that sort of maybe tracks payments on a more daily basis as opposed to at the end of each quarter and via paper, whether it would be harder for a fraud to take place.
You know, we've had some customers who have utilized BlackLine and discovered fraud in exactly that fashion, because when you've got everything centralized instead of in thousands of spreadsheets spread all over, you do get much more transparency into what's happening.
Well, there we go. Wirecard should have hired you, or maybe not. Then they would have been found out earlier. Thank you so much for joining us. Much appreciated.
Thank you.